Well, thank you very much. That was quite an introduction, a bit of a step back in time for us all. So I'm very, very pleased to be back here at the RIU Explorers Conference, a fantastic opportunity to always to give an update on the continuing growth of a very large-scale now coastal copper hub in northern Chile. I guess there's a bit of housekeeping firstly to attend to. Today I won't be giving the company's first 3D presentation. We've just recently announced that, put it on our website for all shareholders, investors and anyone interested to really get your hands into our models and data and have that transparency and visibility that all of the Canadian companies enjoy through a platform called Verify. So my first prediction is that within 2 years, 80 to 90% of the companies that are exhibiting here will have Verify and have that capability for people to interrogate the resources and the investment proposition of each of the companies. So at 1:30 today, we're taking a virtual site tour of our projects, Costa Fuego, and I invite you all along to our booth. Our team will be walking through that from 1:30 at the end of lunch. And no safety hard hats or safety boots required. So I'm going to now just talk about quite a significant pivot towards growth that the company has just announced following a major consolidation step at the end of last year. But firstly, I'd like to talk about copper, and just very briefly, it is the critical metal of the future. The world's decarbonisation push and the electrification of everything does not occur without this key commodity. And in fact, I think that what you're seeing in copper today is very similar commodity thematic going on with iron ore in the early 2000s, or what happened to lithium in the late 2016, 2017. Both commodity classes sitting in front of a structural demand shift with the inelastic inability to produce supply quickly, capital intensive, time intensive sector of the resources space. And what transformed the iron ore price to 10 times and made everyone in Australia an expert at the time in iron ore, from a commodity that they valued little more than asphalt for putting on our roads, that 10 times re-rate in the price of iron ore drove eventually the demand that is powering the world forward. And lithium is certainly where the puck is at the moment, but I would contend that copper is going to be where the shift of dollars in the resource sector will go. Recently with Wood Mackenzie, we would have seen the estimated capital spend that's required in the future-facing metals. There was a mountain of difference between everyone else and copper. And it's because there are no large-scale copper supply available in the next 10 years. Even if we could produce 10 million tonnes of extra copper a year, it's going to be very difficult. So those are the preconditions for what we believe is the key investment theme in copper. And if that's the key investment theme and we're seeing a change in Australia, with Australia about to lose Oz Minerals and $9 billion or so about to wash back into the Australian market looking for a home for copper sectoral investment, then the trickle down doesn't have to go far to get to hot Chile. We are the standout ASX copper developer. We're the largest scale, some 3.4 million tonnes of contained copper, 3 million ounces of gold and some other credits in silver and molybdenum. We're also one of only 2 projects capable in the world of producing 100,000 tonnes of copper in 2028. We're the first in line outside of the major miners. And outside of that, our peer space in the Americas, we're the only one that sits at less than 1,000 metres altitude, backed by Glencore, and this year initiating another growth phase to take this resource well over 1 billion tonnes. The capital structure has been cleansed over the years. We sit really clean with 119 million shares on issue, and we were quite careful with our money last year given the market conditions, and so we sit with strong cash of over 10 million at the moment. We have a beachhead in North America, and we are intending to replicate something that Equinox did in the last cycle, which was to move into the North American environment where all of these senior copper developments are generally funded, and in particular are valued at near on 6 to 10 times the valuation of the Australian large copper developers. And that is alive and well today, and we'll look at that in this presentation. Last year we completed about 80% of a pre-feasibility on this large production hub that we're building on the coastline, looking at a scale concentrator for sulphide of around 20 million tonne per annum, feeding about 100,000 tonnes per annum of copper production and up to 70,000 ounces of gold. So to put that into context, not too dissimilar to what Oz Minerals is currently producing. We'll also be producing some cathode plate, and that's what we were studying. We've paused that owing to some advances on consolidation that we'll be looking at. On the permitting, this is the reason why we're one of the first in line of the largest undeveloped projects in the world, rated by S&P as a top 10 undeveloped project in the copper space. We've spent over a decade and a huge amount of dedication over a team that's really stuck with this and now has nearly all of the key permitting in place to build this. Some of these items took 10 years to be granted in terms of the maritime concession for water access, and then even last year another 2 years for the Navy to give us the actual physical land on the coast. So electrical easements in place, water power lines, water easement corridors in place, surface rights. We have a initial offtake partner with Glencore on 60% of our product at benchmark pricing, which means that a lot of the off-takers in the world are also hunting for the other 40% of supply. 40%, that's 40,000 tonnes of copper a year. And we put that into context of the projects that are producing in the ASX, which we'll look at. There's not many because we don't consider things less than 35,000 tonnes per annum of copper production as really meaningful in the global copper sector. Port access is the last thing that we're negotiating. We just happen to sit right next to a port. So in November, we announced an important transaction with Antofagasta Minerals. It allowed us to join a bridge between the Productora project next to the Pan American Highway in yellow and the Cortadera addition, which has quadrupled this resource base in the last 3 years since we added that. Circa 1 billion tonnes, and at the moment, finally, hot chili after 2.5 years of negotiation with Antofagasta, securing a very low-cost transaction which gave us the other side of the tenement to where our Cortadera porphyry discovery is. So that transaction was announced in November. We kicked off with 2 rigs on the ground, 3 shifts of drilling, and we're about to get our first results out to the market shortly. Importantly, what this has given us is access to a much larger potential porphyry cluster at Cortadera. No one knew that we didn't own the other side of the tenement boundary. We didn't show it on our maps, and we've been busy playing dead on exploration a little bit around this fantastic discovery until we had this locked up. So it's an option to take out 100% of AMSA's leases, which already has a discovered porphyry that was drilled back in 2005, our 4th porphyry, which we're now drilling and hoping to add quickly. You can see the difference of distance, only about 14 kilometres between Productora up at the top left corner of the slide to where Cortadera's 3 porphyries sit, extending through the surface. So quite a fantastic opportunity to double the strike length of Cortadera. And what this is all now standing behind is a pause on our development studies, the ability for us to look at this project in its entirety and to dream a little bigger. Firstly, on resource growth at the drill bit, and this will be growth focused this year, development expenditure put on hold until we can push this onto the tier 1 plateau to the left of us. We sit well entrenched in the top 20 undeveloped projects. We're one of the few that's low risk, and ultimately we're driving for resource growth, which will hopefully give us the potential to lift the scale towards 150,000 tonnes of copper production. And for context, that would make Hot Chili, outside of the majors, the largest undeveloped by potential production in the world. And that's very important when you're talking about positioning on things such as total cash cost. We're not building this project with the hope that copper prices are going to go to the moon. We certainly see the thematic for them going a lot higher, but we're building this for an environment that is long-term, and that means total cash costs sitting in the first quartile are important. And how you get that in this business, in copper, you do it with scale. So that's what that growth will be standing behind. And when we look at the supply problem in copper, and this is something I asked my team to put together, and our Chief Operating Officer has done a great job on showing something I couldn't find from any other corporate presentation, from any other investment banker, was show me the projects that no one is disputing are coming. Not the pebbles of the world that just got canned, or resolution that's put back another 8 years. And I want to break this up into 3 slides. Firstly, what are the majors going to produce in the next 10 years? And there's near-term production. It's about sub 1 million tonnes undisputed. And then we look at the ASX and we realise we don't have a lot of large supply coming from the ASX in the next 10 years. And this is in green for companies where they've stated their production and development timelines, and in blue where we've applied Hot Chili's development timeline, just to be fair to the crowd. So you can see on the ASX, Hot Chili is not just the standout with its resource base and therefore leverage to copper prices, but also it's the most meaningful of the ASX large-scale copper developers in terms of scale. And then when we move to the TSX, we see where most of the senior projects are located. So currently Costa Fuego and Jose Maria, now owned by Lundin after its takeover, were the only plus 100,000 tonne projects outside of the majors coming in 28. So we've been able to take that timeline into consideration, take advantage of this year, not make it a foot race against ourselves, and bring this project still first in line out of one of the more significant projects in the world. I guess the opportunity for the Australian market, much as it was in iron ore and lithium, is that if you believe in copper, then believe in Hot Chili and the leverage that you get with this asset. Currently, the Australian large-scale copper developers are trading at about 1/10 where the North American copper developers are valued on metal basis. That will change, and I imagine that makes companies such as Hot Chili holding assets like this that are very de-risked and near-term extremely leveraged to the copper price. So over the coming year and a half, we aim to deliver this growth phase into a resource upgrade at the end of the year, deliver our PEA to give some granularity on what a 100,000 tonne per annum copper project looks like, and that'll be based on a pre-feas that's 80% complete, and then finalising the right sizing of this project in the first half of next year and on track to production in 28. So thank you very much for giving me the opportunity to provide this update.